India is widely perceived to be among the fastest growing major economies in the world in 2022. The recent softening of commodity prices and supply chain pressures have eased the terms of trade shock that India faced in the aftermath of the pandemic and the war in Europe. With the consequent easing of imported inflation pressures, India's CPI inflation has peaked in April 2022, that is in April this year. And in fact, India's inflation is currently lower than a large number of its trading partners. The shift in the commodity price outlook is also altering the assessment of India's current account deficit in 2022-23, that is in the current year, which is now expected to remain well within sustainable levels. At a time when food security is threatened the world over by shortages and soaring prices, India's large buffer stocks of food grains supplement domestic supply and assure food security in the domestic market and in the domestic segment. India's foreign exchange reserves of US dollar 561 billion as on August 26, that is the last published figure. It provides a cushion against external shocks as is being demonstrated on a day-to-day basis. The health of our banking system is sound. It is well capitalized and well provisioned with improved asset quality. The Indian rupee has moved in an orderly manner in the current financial year so far. It has held, that is the rupee has held its own in a world of sharp depreciation across the emerging market economies and also advanced economy currencies. The US dollar has appreciated by 11.8% in the current financial year, our financial year, this year so far. The Indian rupee has depreciated by 5.1%, which is among the lowest in the world. And 5.1% is still today, after close of the market. And this depreciation is in fact one of the lowest in the world. The RBI is in the market on a regular basis, providing liquidity and confidence so as to facilitate its smooth and normal functioning. Exchange rate stability is an intrinsic element of our overall macroeconomic and financial stability. Our endeavor amidst the extraordinary events unfolding globally on an ongoing basis has been to anchor expectations and allow the exchange rate to reflect the fundamentals rather than overshoot. And our approach or our intervention in the market is broadly, as I have pointed out, is broadly premised upon two basic principles. One is to prevent excessive volatility of the Indian rupee, that is the exchange rate. Second, and the second point is that it is also built around the theme of anchoring expectations around the depreciation of the rupee.